Welcome to Biztech's Investor Conversation Show. Today, the focus is on Iris Capital Partners, a pioneer venture debt firm in Malaysia that provides alternative financing options for growth stage startups in Southeast Asia. To give us some insights, we have Dato Wan Kamaruzaman, chairman of Iris Fund, and Kimo, the partner at the Iris Fund. Now, Dato Wan Kamaruzaman is the former CEO of the largest public services pension fund and sits on the board of Malaysia's stock exchange, as well as on the board of several of Malaysia's largest institutions. Now, gentlemen, welcome to the show.
Thank you.
Now, Dato Wan, I'm going to start with you. Tell us about your journey in founding this company.
Okay, this company is actually been established in May 2021. It's quite a recent new company, and somehow or other, actually come up from the Ministry of Finance initiative to plug in the gaps that exist in the Malaysian financial market ecosystem, especially for startup companies. So what they did was that they set up Penjana Capital, and Penjana Capital has come up with this program to seed some of the investments in various stages of companies in not just in Malaysia, it's also in the Southeast Asia region. So what they did was that they look at funding for various stages. Two companies that have given it for seed investments. Two companies they have given it for Series A and B investments. Two companies for growth strategy, and another two companies for venture debt. And we came into the venture debt space, and we were one of the two recipients of Penjana's investments into this space. The total investment is for around 1.6 billion ringgit.
And how much of that has gone into Iris Fund?
Iris is allocated 160 billion, of which 160 million, of which 80 million is from Penjana and 80 million is from the partnership of Iris Capital Partners together with Hanwha of Korea. The other thing about this scheme is actually they wanted to also attract foreign investments into Malaysia by virtue of a partnership. And this is where we managed to get Hanwha Asset Management as our partner.
Okay, Kimo, tell us about Hanwha Asset Management and your group's maiden venture partnership in Malaysia.
Yeah, so just going back to the initial setup of the fund. So back then, we were handling different funds around the region. We've been working with financial institutions, startups, and local entrepreneurs for the past 6 to 7 years. And then when Dana Penjana had this initiative, we were appointed through our connection in Malaysia. And then we were once connected with Dato and Sharina as point of contact. And we figured it's a good opportunity to get into the market and probably bringing overseas capital to the local startup ecosystem. And then we think it's really a good initiative. We think we're very satisfied with the quality of startups and also the technology that local startup ecosystem has.
Was there any particular reason, Kimo, why you chose Malaysia as a base as opposed to some other country in the region? Because after all, there are a lot of venture funds who are based in Singapore, and they focus primarily, especially in countries like Indonesia.
Yeah, I mean, Malaysia, we saw a lot of huge potential left still, because a lot of funds are set up in Singapore, Indonesia, and Vietnam, but there aren't that many options available in Malaysia. We figure by creating this fund, there will be more fund accessible to these entrepreneurs. So huge, more potential.
Now, Dato Wan, over to you. What are some of the key differences in venture debt as opposed to just pure venture capital? And what was the gap that you saw that you wanted to exploit this opportunity?
Okay, when you talk about the two venture debt and venture capitals, it's actually not competing, it's actually complementary to each other. Actually. Usually when you talk about venture capital, it's all about equity investments, but this is actually about debt as well. Globally, you know, 80% of the venture capitals are financed, 20% are in the form of debts, not just, so it's quite a sizable amount. But the biggest difference is actually in terms of, you know, we will not, the companies or that uses debt will not lose their equity stakes as much as if they're using via the equity vehicles. So normally, as a debt, you have to repay the debt, but you don't give up that much equity. For venture debts, they also do take equity, but a small portion, depending on the size of the debt that you take. So normally, like, you know, for us, for example, $1 million, you will take 5 to 10% in terms of warrants, and that is where the equity side, that is the uplift on our side. So I think it's good for fast-growing startup companies to look at the debt side, because they will not lose control of the company, and also via the debt side, you will not need to take a board seat or meddle with the management of the company. We'll just monitor the company performance and the ability to pay off the venture debt.
And also, but however, one of the things with venture debt is you often come in a little bit later, isn't it? After perhaps a validated venture capitalist or named brand name so forth has done the necessary due diligence. There's a certain criteria, isn't it? Could you highlight what you're looking for in terms of that sort of criteria in terms of validation?
That is correct, actually. Obviously, when we look at those companies, companies has their pre-seed, seed, and we are more towards the A series and bridging some of the funding requirements between A and B, or C together with A, actually, A series funding. But definitely we need to look at how the business model is, the cash flow, the ability to pay, so that there is at a strong growth rate, growth stage, but not yet, acceptable by the financial institution for that kind of requirement in terms of giving them funding. So we feel in that we are trying to fill in that avenue or that gap that is present, that is not present in the current ecosystem in Malaysia, or maybe in other parts of the region as well.
Okay, I want to go to Kimo. Kimo, can you tell us and get into the nuts and bolts into the mechanism for investment? How does it actually work? What are the financing terms? For example, repayment, interest rates, collateral, warrant coverage, and so forth. Could you shed some light into this, please, Kimo?
Yeah, it really depends. It's all up to negotiation, but if I just give you an idea of how things work, so the interest rate ranges from 8 to 15%, depending on the stage of the company, whether they are generating enough revenue for them to repay. And then we try to get the approximately 10 to 20% of warrants for the that to be for us to exercise the option to have the equity at the end of the tenure. And then it takes about 2 to 3 months to get the deal done. A lot of negotiation involved with the entrepreneurs, as obviously they want to lower the interest rate. We want to negotiate whether that's actually suitable for them, and etc. So nothing much different to venture equity financing, but we tend to look at more of whether they are generating enough revenue, whether they have enough cash runway going forward.
And also, what sort of repayment tenure are you looking at?
It also depends, but we tend to have 24 months.
Okay, 24 months. So, and also, would you come in, give us an idea of your rights to invest clauses and any other covenants that you perhaps put in as well?
Well, nothing strict, nothing strict. We try to be really flexible because that's where venture debt has really, has a lot of advantages compared to venture equity. So we try to be flexible. We try to be, entrepreneur friendly sort of contract.
Okay, over to you, Dato Wan. Part of the Penjana Capital initiative is really to grow Malaysian companies and bridge funding gaps. Venture debt is something that bridges a big gap because there isn't a lot of venture debt out there. So what is your investment focus in terms of sectors, and what sort of companies are you looking to invest in?
Okay, we're still very flexible in terms of sectors, but so far we have looked at F&B, consumer, fintechs. We are also looking at healthcare and education if there are opportunities there. And the other thing about the flavor of the current time, which is about companies having products that is ESG compliant, actually. So we're looking at all those sectors at this point of time. But so far we've funded one, which is actually on the F&B.
And that's Growthwell Group out of Singapore, right?
Yes, correct. And we have finalized 2 or 3 more, but that is just preparing the documentation stage. So those are the kinds of company. I know the other 2 are in the fintech business as well as in the consumer business.
And what sort of ticket sizes are you looking at in terms of each deal?
So far, what we've come across, we are giving between 1 to 4 million US dollars, and the tenors can be between 1 year to maybe 3 years, with an average duration of probably on the higher side if the company requires it, maybe about 2 to 3 year kind of a duration for our lending to these startup companies.
And what sort of return are you looking at on a capital and on an annualized basis?
Yeah. Okay, I think we are targeting in the mid-teens actually. Although our lending activities are well below that, it's between 8 to 15% as mentioned by Kimo. But like I said, we also have a bit on the upside via the warrants, and that is our basically kicker to get our target returns actually.
Okay, now, so Kimo, over to you. In terms of your involvement of Hanwha, operationally, how does this work?
Operationally, yeah, it's been, to be completely transparent with you, it's been difficult because of COVID, we're not able to base that, right? But we're actually, operationally, we sort of, because as Hanwha, as a brand, we've been working with so many different funds in the region. We have very high quality startups in the region too. So we also were able to bring high quality startups into the pipeline, and also a lot of strategic investors from Korea who are interested in working with portfolio companies in Malaysia too. So our operational expertise will be from our strategic partnerships around the region.
Now, Hanwha is a big player in Korea and a very well-established brand. Is that sort of a catalyst to bring other Korean investors into the region?
Yeah, definitely. Ever since we set up this fund, a lot of Korean venture capital and institutional investors started getting interested in the local market, and they're asking us about the quality of startups and what it's like to work with Malaysian partner and etc.
And what are those investors looking for specifically? Are they specific